Good afternoon, everyone. Jason here. Today is October 9th, and this is your aftermarket update. All right, we had a very good day here at the Oil Trading Group. We were a one and done trade here. This is your trader view stats for the day. You can see we had $940. We had the volume here is 2 contracts in and 2 contracts out for a volume of 4. And the number of trades is 1. So again, very handsome one and done trade here today. We like it like that. Today was crude oil inventory report Wednesday. It is nice when you can get that trade done prior to the inventory number. Doesn't always work like that. Today was also FOMC meeting minute day. FOMC meeting minute days do tend to provide a little bit of pause around the market. So again, feeling very good that we were able to get in one trade, very small risk. 10 ticks was the initial stop on our entry today, and we ended up with 47 ticks times 2 lots. So again, about a 5-to-1, almost a 5-to-1 reward to risk ratio. And again, we spent a lot of time talking about reward to risk ratios in the trade room today. We have a very strong belief system that if our trading edge revolves around our ability to cut our losing trades short and let the winning trades run, if you've spent any time listening to what we do in here, you know that to be the case. I'm also going to do something here for you today that I don't normally do. I don't spend a lot of time going into the granular detail. We usually save this for our room members, but for today, I'm going to go into some of the granular detail as to why we got into this trade opportunity. All right, so we have a couple things that we're looking at here today. We have what we call our market maker levels. The reason we call these market maker levels, the reason they're named that is that they were given to us by a veteran floor trader, someone who traded on the floor of the S&P pits for 30 years, and he used a version of these levels in his everyday trading. They were given to us, and we use these now in the electronic version of trading. So anyway, with that being said, we had a set of levels here today that we were looking at. Again, these blue boxes represent the zone of influence around these support/resistance areas. So for example, if you are looking for a decision point, a support and resistance area, and you are waiting for the market to go to the tick, right? Then a lot of times you're going to miss out on opportunities. I'll explain that in just a moment. But support and resistance areas are more about zones of influence than they are to the tick precision. And in this case, we have a box that we draw around these levels manually. We teach you how to do it, and we talk to you about why we do it like that. But in this instance, there is a zone of influence. Now, remember, if you're waiting for to the tick precision, then you're going to participate every time that this trade loses when it comes up to the specific level. And what I mean by that is if you wait for this to come up to that exact level, then every time the trade wins, you'll participate from there. But every time the trade loses, you'll also participate. However, if you do not understand that there is a zone of influence around a market, then every time this trade ends up winning, you're not going to participate if you're waiting for to the tick precision. So the question becomes, how do you work and understand how to get into that trade, and how do you understand that where to get in exactly, when to wait for to the tick precision, and when to go ahead and go at the front end of that zone. All right, well, I'm going to tell you exactly how we did that today. So this is a profile chart. The only thing I really want you to pay attention to is this RTH session profile going back to the 7th. There was a naked point of control here on the 7th. That was at 53.58. Also, if you come back here, there was also a naked point of control that got taken out by 4 ticks on the 7th. So these points of control are generally very good reference points on your chart. They are very visual reference points, meaning that all traders see these. And so when all traders see something and they all understand or have an expectation level for something to occur, then the likelihood of that thing occurring becomes better, right? The probabilities become better. So today, there was a level right up here at the bottom of this box. This was 58 here, was the zone of influence around our level. Also, the A period came in and took out at 58 that naked point of control. So the market opens up at 17 and begins the process of rallying right up into that area. Now, it's a little bit nervy when that occurs, because you're saying, well, gosh, am I going to be standing in front of a moving train, a speeding bullet, those kinds of ideas? And there are occasions where, yes, you get taken out, but this is where your reward to risk ratios come in. Before I go into that, let me explain now to you. So that's one reference point. You had this area of resistance that we look at, these market maker levels. That's your second reference point. And today, I'm going to talk to you a little bit about the Bookmap tool. This is the heat map that we like to look at. Now, Bookmap is a very good tool. They offer a number of very well-priced programs from free to $79 per month. And it is a very, very good tool. And one of the ways that we look at this tool, and by the way, I'm going to include a link in the description of the video if you want to get a copy of the Bookmap. I'm not going to go into a ton of detail. They have lots of good information on their website, but I'm going to tell you today how this particular tool allowed us to provide that last bit of confirmation that allowed me to get nearly $1,000 trade on 2 CL lots today. All right, so the first thing I want to draw your attention to are these lines on the chart. You can see that there are different colors of lines. If you look up here at the key, right, if you're way down here on the cool end of the key, then the liquidity that's between you and that price is very light, limited, small, right? So one of the things that we look at, in that we look to confirm whether or not there is a valid support or resistance idea, is we like to see where other traders are providing liquidity. Where are they putting in limit orders? In this case, limit orders short, right? So again, you're watching the Bookmap, you're watching your level, you're understanding that level, you're expecting it to hold. And once you begin to rally and get close into that level, this liquidity begins to pick up. Now, I don't have a full screen on here, but you can see that going back, that the liquidity was really stacking up around that level. And we tried to get into it, and then there was some selling. We tried to get into it, and there was some more selling. We got a positive delta here. We couldn't rally up into it. It began to come down, and then there was some more liquidity underneath. So between these two zones here, there was quite a bit. By the way, 39, which is where we were bouncing off of, was a previous high, was the overnight session high, was up there at 39. So there was lots of rotation around this zone. So we looked to get into the opportunity. We were talking about getting into the opportunity at right at the top or the bottom of our box, right there at 58. We said that there was a profile reference point on your chart up here at a previous point of control at 58. And we said that there was liquidity that was pooling up around that level. And so we said, okay, those were the three reasons that we took, that we said we're going to get into this opportunity. And once the market began to rally up into that area, we got into our opportunity at 58 short. And that's what you're going to see here on the video today. It one ticked through to 59 and then began the process of looking to sell off. Now, if you have a fear of it railroading you up through there and taking you out, right? And that is a distinct possibility at any trade that you get into. But again, you had quite a bit of liquidity stacked up here. Our thought process was going to rally into this zone and then begin to pull away. And we tightened up the stop very quickly. In fact, you'll see that I drew this blue line on the chart, which was that previous high in the overnight session right there at 39. So you remember me telling you about that. And you could see that as the market was trying to rotate into that area, that was providing support around the 42, 41, 40 area, that whole location. So our thought process was simply this. If we rally into that 58, 59, we'll have a small stop. We'll have a 10-tick stop. If the trade works, then we're going to be hanging on. In fact, what you'll hear me say in the video is I'm hanging on for this MS signal down here at 53.13, and if it was beginning to get aggressive, then we would be looking to hang on all the way down to the volume weighted average price. So for us and our experience and the way that we use our levels, we know that if we make it to a level above but can't get through it, then you're going to be coming down to the level below. That's the expectation level. And then you have all of these other tools that begin to support that idea. A lot of times traders try to make it too difficult. Well, I need to wait for this to happen and that to happen. And one of the things that we talked about in the trade room today is that it doesn't matter if you have a system with 10 rules that need to be fulfilled every time before you enter the trade. it doesn't matter if you have a discretionary system that has a couple of ideas that you look at and you go for it. At the end of the day, only two things can happen the moment you enter into that trade. That trade is either going to work or it isn't. If it works, you write it down to the logical targets that you identify, and if it doesn't work, you get out. It's just that simple. So for us, we said that we had a really good understanding of a visual reference point, our resistance area, and also the liquidity that was piling up in big quantities around that support / resistance area, in this case, resistance. So we said we're going to get into the trade. And so we did get into the trade. We got in at 58. It one ticked up to the high at 59 and began to rotate around that previous high. We moved our trail stop to break even very quickly because we had, in fairness, you had been making a series of higher lows and higher highs. And so we were a little bit concerned about that area holding as we got into that inventory number, but we felt like that it was going to be a decent opportunity given all of the factors that I just mentioned. So as the market continues to roll, once we finally broke down to this 39, then we started feeling really good about the trade. Market comes down, eventually gets to within a couple of ticks here of the volume weighted average price, rallies back up, and then you have the inventory number. I got stopped out on this pullback from the 01. I ended up out at 13 right here at the at our resistance area. Market then goes through the inventory number and begins that process here of rotating around. It is sort of interesting on the day that we did eventually come back and touch the market maker level MS target before the market really continues to do what we were expecting it to do and comes all the way down today, almost down into that MS mid, and ultimately does come down into this level here. So again, it's a very simple process that is made complex by emotions and personality and things of that nature. But again, a very simple decision-making process. We had a resistance point, which is a decision point on our chart. We had another reference point from a previous point of control that had not been tested yet. And we also had the heat map that was telling us that there was liquidity pooling up around those levels, and that if we did rally into that level, that there would be a pretty confident that there was going to be a rejection out of that level. If I was wrong, and that happens, if I was wrong, then I had a 10-tick stop on 2 lots, very small risk. I was right, and my reward was almost $1,000 at 5-to-1 reward to risk ratio. So what I'm going to do now is I'm going to show you that trade. I'm going to show you how we get in. You're going to be able to see how the trade moves. I'm going to cut the trade into pieces, speed it up, put a little music behind it, but you'll get the gist of the trade. You'll see where I get in, and you'll see how I get out on that trade day as we pull back into, like I said, into this MS signal. And we were out about 15 minutes before the inventory number. So it was a nice, clean, crisp trading day, one and done with an almost 5-to-1 reward to risk ratio. So without further ado, here is that OTG trade of the day. All right, I'm in at 68. 58. I'm in 58 short, stop 68. And I'm going to be looking to target back to, well, we're going to try to target back to the MS signal down here.